So, welcome to 25X Trading, and today what we're going to talk about is what is a retail prop trading firm as opposed to a proprietary trading firm. To get you an idea is a proprietary trading firm is one that actually deals in the market. It's somebody basically that leverages out capital through a capital firm, and you're putting your capital on the line, but you have access to a tremendous amount of leverage. Now, you have to be smart about that, and you have to realize the numbers that you're dealing with mathematically to realize that you're only trying for 2% a day, 1% a day. So that's the difference. Now, you're asking me, what is a retail proprietary trading firm? So if you ask, and feel free, go to Google, ask the simple question: retail prop trading firms, do they use real cash? Do they use real cash? Well, the question is no. Most retail prop trading firms do not use real cash to trade with at first. They start with simulated or demo accounts to evaluate traders, and real capital is only provided after a trader provides consistent profitability under strict rules. Now, even on a funded account, many firms use virtual capital, not real money. Basically, the payouts are coming from a portion of the profits generated on this simulated account and the firm's primary revenue source of evaluation fees. So, can we honestly understand how stupid you are if you actually take a funded account trading competition? Can you really figure out how dumb you really are? You're going to pay someone $50, $100, $300, $500 to play a video game, a software video game that they've rigged up. Because guess what? On these simulated accounts, they're writing the algorithms in there. They're basically saying that, okay, we're going to have order flow, and that order flow will always give you the worst possible execution available. And there's nothing you can do about it because it's not live trading. So now you go into a stock A, and there's so many rules when it comes to these quote-unquote trading fund to get funded. You know, on these demo accounts to evaluate these tests and stuff. You know, you can only maintain 2% on a rainy day. You can't trade on days that are above 85 degrees. It's ludicrous. The amount of restrictions they put on you, you're literally throwing your money away. Simple as that. So Morgan Stanley, a long time ago, they were talking about this along with Bear Stearns, which is no longer available, about retail traders. And they saw this forthcoming, and then Goldman Sachs really did the survey a year ago. Out of over 200,000 quote-unquote traders who were trying to get a funded account that were taking the evaluation, 199,680 failed the evaluation. Never even got to the quote-unquote part where they were getting funded. Okay, great. So everybody lost their money. All 200,000. Now out of that 200,000, you got 600, let's just say, roughly 600 people who quote-unquote became funded. And then out of that funded, think about it. The only people making money out of it, they're getting paid off the testing fees. They're not getting paid from the market, which is a one-to-one scenario. Someone wins, someone loses. There's a market maker there to make sure that the market goes one way. Here, if you're placing a bet against someone, okay, and there is nobody on the other side of that bet, you're guessing Tesla's going up, and it does go up. Who's paying for that profit? You never executed a trade on the floor. You never sent that ticket in. So guess what? All quote-unquote profit that's going through has to be paid by that prop trading firm through their testing. Now, It doesn't take a genius to figure out that if they're paying out profits, and even though they're keeping 70%, 30% of it, they're making every way possible for you not to get paid. Because if they pay too much, guess what? They go out of business. There is no scenario where they pay too much and they stay in business. There is no scenario. So wake up and stop being so stupid by giving away $200, $300, $400 a month to these dumb, stupid evaluations. People can't be that dumb. It's amazing. In all the years that I've been dealing with financials and dealing in Wall Street, this is one of the dumbest things that have been popping up, and the amount that it's been popping up is astronomically stupid. And to think that people think that they're actually taking a quote-unquote test, I mean, it's dumb. And to give you an idea, look at Surge Trader. They were a big one for a while, okay? And they popped up and they disappeared. But in that 2-year period of time, in 2 years that they were around, and they were run by a couple of scam artists, a husband and a wife, and in that 2-year period of time, they banked out an astonishing $110 million. Now, I'd like to know if anybody actually made money on that. I'm pretty sure no. Anyway, that was a VPN that I just shut off. So if you're that dumb and you're believing that's the truth, then guess what? You deserve that. All right? And anyway, have a nice day.